Hi everyone. Today let's see what they have to say about the market dip and when they say it's over. And they say it's over once this happens. Let's see what that is. And of course we'll get into all of the charts and indicators as we head into this quad witching week. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the market dip is over once this happens. Let's see what that is. We can see here they say the market is still at risk of dipping below that 200-day moving average. We've been talking about that, but we are seeing some bullish divergence. We've seen that as well, signaling a bottom and that some selling pressure is fading. Market has dropped about 10% over the past month. The NASDAQ was down a little bit more, especially to the lows if you're including the wick lows. But let's see what indicator they're saying shows rock bottom. And big surprise here, they say markets do not look good. They've continued lower. You can see from top to bottom 10.5%, from peak to trough as low as 5,500. But of course, it's not a bear market yet. It's not in that 20% area yet, but we're in that range here of the 200-day moving average for the first time in over a year, which is a key risk metric. We've been talking about it for a long time, and you can see that move here from that 19 February high heading into this kind of March 13th low. We did see a nice bounce on the Friday, but from peak to trough, that's what they're talking about here. And they say the S&Ps have made its first lower low since September of 23. You can see it here, which ended up resulting in some consistent selling over the next following weeks. And that is what we're looking for here on this channel, looking for some bigger selling. But you can see we did have a nice bounce a couple of weeks before we got that continuation lower. I am expecting something to that effect. The selling has been way more aggressive than what we saw back here in July, but this is what they're highlighting and this is where we're at now. Relative strength has now dipped into that kind of bear zone, well below the 50 line. We are in oversold conditions on the short-term metrics, and then the short-term in this case is the daily charts based on these charts here. And you can see what they're talking about. RSI lower high divergence. We'd been talking about that for a long time. You had multiple divergence levels. Now we're in that bear zone below the 50. Is this a time where we get a little bit of buying action, get above the 50? And if we don't hit that overbought condition, we kind of hover in here around 60 and then break back below 50. That could be a big bearish indicator, at least how I trade the RSI. But if this gets into oversold conditions, that could be an opportunity. Remember, this is the weekly chart. We're not oversold on the weekly chart. We are, however, oversold on the daily chart, which again gives you an opportunity for a short-term rally, in my opinion. They also mention here we've been seeing a ton of selling pressure quietly building in the background. We've been talking about that on the channel, and we've also been talking about the political environment. Tariffs seem to be one of the bigger triggers here in markets, and then you have slowing consumer confidence, which is not great either. The jobs market also getting a little bit worse here slowly. But when is it time to buy the S&P 500 with this bigger move? They say the biggest indicator is when we reclaim that 200-day moving average. That won't alone flip the trend is what they're saying here, but this is a great opportunity. Once we get back above the 200, that starts to limit your risk and give you some potential for stronger pushes. They say it comes with its own bag of risks, but it would give you the opportunity for some bigger rallies here. So we'll see. They also say RSI divergence. We watch that very closely on this channel. You can see lower lows here, but higher lows on the relative strength, leading to that broader rally. Also a very good indicator, especially on these longer time frames when you see these kind of culmination bottoms. That often results in a very, very strong rally out of it. So something to watch for. We're not quite there yet, but I think there's an opportunity for it over the next week. Looking at fear and greed, we finished the week at a 21 up from an 18. So we did get a little bit of a bounce. You can see sideways consolidation, a dip low, and then a bounce out of it into the Friday session. The Friday session was pretty solid. Still a really extreme fear across almost all of the metrics except for volatility, which came down a little bit. Still elevated, but it is down from its peak, which was pretty much the same peak that we saw here in December as well. Safe haven demand pretty much bottomed out at a minus 10 or a minus 0.9, somewhere in there. And you can see we got just about as low in August of 24, and then we did get a really, really powerful rally out of that. It'll be interesting to see if we get that same kind of rally. And then junk bonds here sitting in regular greed, continuing to outperform, and those had a nice move on Friday as well. Moving over to the AAII survey, this has been flat for 3 weeks. I don't know if I've ever seen it be this flat for this long. The bulls only at the 19% level. The bears sitting between 60 and 59. Did dip to 57 just for a second, but really right in that same range, 55 to 60. And then the neutral right in that 20 range. Interesting to see this very, very consistent. And these are extreme levels. You don't usually see the bears this high. You don't usually see the bulls this low. And you can see the historical averages there. That is the normal condition. This is definitely not normal. And I do think that this is going to drive markets down in the medium term, but in the short term, this seems like a good contrarian metric. Moving over to seasonality, you can see the low of the month is supposed to be the 17th. Really, the end of last week, maybe the Monday this week is right where that's supposed to take place. And then we're supposed to see a nice little rally into the end of the month. Seasonally, we'll see if that happens, but that is what we're looking for. We've been following this kind of regular year, not the post-election year charts, and that points to an end-of-month rally. Moving over to the seasonal calendar, you can see Monday of quad witching, up 26 of the last 37. Pretty good metric there. And then you can see bullish Tuesday, bullish Wednesday, and then pretty bearish here Friday. I would guess the Thursday is going to be a little bit bearish as well. But this is quad witching week, so we have tons and tons of options and futures rolling over. You also have retail sales Monday. That's going to be interesting. Want to see how that consumer is doing. That seems to be a pretty big driver in markets, at least for now. And then you got FOMC on Wednesday. Want to hear what they have to say with the light inflation data that we got last week, existing home sales, Philly Fed survey, and then semiconductor billings there to wrap up the Friday. And then looking at the economic calendar, just to pick out any last details, Atlanta Fed GDP there for Monday. Want to see how that's doing. It's gone very, very negative. Don't want to see that continue. Want to see a little bit of a reversal there. I think this is another driver for markets. If we actually got a GDP number in this range for Q1, that would be terrible for markets, in my opinion. Otherwise, like I said, retail sales in there. You got housing starts here for Tuesday. Wednesday, you got core and headline CPI for the Eurozone, interest rate projections with the FOMC statement on Wednesday, obviously the big driver for the week. Want to see what their comments are after all of the moves with tariffs. I'm sure they'll get lots of questions on that. Initial jobless claims, that's kind of retracted a little bit. Philly Fed, want to see how that's doing. Existing sales, 10-year tips, want to see that continue to stay low in that 2 range. Fed balance sheet, that's kind of slowed the sell-off here. Want to see if they maybe start to flatten out, but we'll see. Overall, not a ton of data except for that FOMC on Wednesday. Moving over to Max Pain, you can see Max Pain 585, much higher than current price. That's just another indicator of potential bullishness this week. Total options, 4.6 million, put call ratio 2.7, not super high. Want to see that a little bit higher, but there's a huge put wall at 580. If we could get above 580, that would make sense. Probably not going to go above 600. If we got anywhere near that, that would be a huge move for the week. I don't really think that's going to happen, but I could see like a 581 finish, which would still be a nice little 4% week. I don't know if we'll get that much of a bullish push, but look at all of these puts, not very many calls in this range until we start to get to that 590 area, maybe somewhere between 575, 580. That might make sense a little bit as well, but either way, should be relatively bullish from here based on Max Pain. Moving over to the charts, looking at the S&Ps, you can see it was down 2.27%, but we were much lower on the week. At the lows, you can see we got down to around 4.5% down, but then we ended up hitting that 55 EMA, closed above it. Momentum still bearish, RSI still bearish. We'll see if we can kind of rally up. What I'm looking for would be like a retest of the trend line here, about 2.5% higher, and then we would look for that continuation low to the trend line somewhere in here, about 7.5% lower from there. Extending out that trend line, that would put you at around 54.40, somewhere in there. But everything still says bearish on the weekly charts. We're a little extended. You can see it's about as low as it goes in that negative 46.64 area on the MACD. Huge volume on the selling candles. So that's part of why I think this is going to be a longer term trend. We don't have the structure to support that quite yet. Want to see the retest, lower high, continuation lower, but for now, looking for that short term rally. And then looking at the daily chart for the levels, you can see the level was 560, and then we were able to get above that on the Friday, looking for 565 to break. Want to see it push into the 584, 585 area. That's right around that Max Pain number that we just talked about. Momentum bullish, RSI breaking above the SMA, should be looking for a counter trend rally here in this quad witching week, in my opinion. Moving over to the Tasty charts here just for a moment, you can see that ATR band for the weekly chart is currently sitting at 541.74. That's going to continue to trend down. Maybe it flattens out a little bit into the 537 area. But either way, I want to see a continuation wick touch of that level, and then we can see that counter trend rally. We'll see if that happens on the Monday. That would be a pretty big move for a single day, but certainly a possibility. Either way, want to see a touch of that lowest ATR band and then get a counter trend rally into kind of the middle of the range here. 589 makes sense. Currently bearish conditions. First time we've seen bearish conditions in a very long time on a weekly close. We have to go back to November the 20th or so in that week time frame of 2023. And then before that, we saw bearish conditions in here early in 2023 before we saw that pretty much 1 year rally up into the highs around November of last year, December of this year. And now we've been pulling back. Are we going to see a pretty consistent down move? It still makes sense for me to see that move. But looking at the daily chart, you can see we were super extended over the first Monday through Thursday. Friday, we got back into the middle of the range. You have that 8 EMA sitting at 565. Want to see it push through there into the 579 area. Maybe that's resistance, but really 585 to this kind of 588 area makes sense to me as resistance. You got the trailing stop there at 592.65 as well. Moving over to the NASDAQ here on the weekly, you can see this structure is broken. We had the breakdown, retest, breakdown. Doesn't look good at all. We're closed below that 55 EMA. Pretty much right in line with this trend line here. If this breaks, then you're looking for a really consistent move to this kind of 11% down from their area in the 17,005 area. Again, still looking for a little bit of a retracement up to the 21 EMA, potentially 6.5% higher from there. And then we would get that continuation lower, which would be closer to about 16 to 17% at that point. That's what I'm looking for, this kind of grinding price action into this zone. Then I would expect a little bit of a bounce. You do have this intermediate trend line in here around 18,200. And then you got the 200 SMA sitting in here around 15.6 right now. And then that should trend up into the kind of 16.5 area over the next couple of weeks, in my opinion. And then that would be a nice target, pretty much in line with this kind of consistent down move into that zone. And then looking at the daily chart, you can see consolidation for basically the entire week after the big move on the Monday of about 3.88%. Consolidated for 3 days, rallied up on the Friday, looking for that 8 EMA at 482.90, and then looking for that kind of ultimate move into here, 500 to kind of 502, resistance there, 503.50, touch that zone, and then get this kind of continuation. Wouldn't shock me to see maybe a little bit stronger push just to kind of suck in all of those bulls and then get that bigger sell, but ultimately, I do think it will sell. In terms of levels, 481.94 is a big one. Want to see it get above that and hold if it's going to do it. And then really 503.50 I think makes the most sense as that kind of first target. Do got some gaps in here as well, going back to that Friday, the 7th candle. Want to see it fill that at a minimum. Moving over to the Tasty charts, you can see we ended up closing still in bullish conditions. We did close below it multiple days, but on the weekly close, we did get back above that trailing stop at 476.01. So we got the test there, still bullish conditions versus the SPY, which is in bearish. You can see that 55 EMA, critical support there, 478.99. It held with this weekly close, similar to what we saw back here on the 29 July candle. We overthrew it dramatically on that next week and then ended up seeing a nice 3-week bullish push out of there. Is that what we see again? Do we get to that lowest ATR band? Right now that's at 452.47. Does it hold that zone in there? 451.56 is also the 89 EMA. That would be an interesting touch. You can see the huge ramp in volume on the weekly charts. Very, very rarely do you see an over 2 relative volume on the weekly chart. We haven't seen it for seemingly forever, it looks like. The last time was back here in May of 2022. You can see that here, big selling through there. And that ended up being kind of a consolidation base over the next couple weeks, really couple months into January. And then we had the rally out up until current. So is this going to be another one of those kind of consolidation base areas? Certainly a possibility, but huge volume. Something is definitely happening in markets. And then looking at that daily chart, you can see huge selling volume here. We got the doji candle, continued to see huge volume in that, and then we consolidated and had a bullish push. So for me, it makes sense that there might be buyers in this zone. The low of the week was in that kind of 466 area, and then we rallied up looking for that 8 EMA here on the daily chart. Right now that's sitting at 481.81, and then want to see it push back into this kind of consolidation just like the SPY charts, 507.50, somewhere in there. Still very much bearish conditions on the daily chart with your trailing stop there at 513.64. And then looking at the Russell, similar to everything else, huge wick lower all the way down into the 197.20 area, well below the 200-week moving average, down 1.5% or so on the week, but we found that trend line, found some support, found some buyers in there. 201.88 is your current support. Current resistance 205.07. Want to kind of see it hold this range and push. Tons and tons of room if we get a solid retracement, potentially up into the 220 area, 224 maybe, somewhere in here. Does it retrace all of that? I'm not sure. We've seen some kind of relative underperformance from the small caps, but for now, it's holding the structure in here. It's round trip this move. Can we see another kind of continuation higher? Structurally, on the weekly chart, this is still very much a bull trend. We're still holding higher lows and higher highs. Is this zone going to hold in here on the weekly? Very, very important. If it does not, you could absolutely see this fall as low as 163. From current price, that's about another 20, 21% lower, somewhere in there. Is it going to do it? Who knows? It depends on what we continue to get out of the political environment. It has not been conducive for bullish markets. And then looking at that daily chart, you can see those levels we talked about. Somewhere in here makes sense. Like I said, 220 to maybe 223.50. The trend lines in here make sense. Get a lower high, maybe retest the low of this consolidation, hit that level, and then continue to sell. Moving over to the Tasty charts here, you can see I ended up buying some shares in there. The buy price was 202. Bought them on that Friday session, held them into the weekend. We'll see if that was a good idea or not. But for now, it's in a small profit. Want to see that continuation. I don't know if it's going to go as high as we talked about, 220 to 222. We'll see. But in the short term, I think we're going to see some bullish price action. It makes sense. Still very much bearish conditions on the weekly chart, but that does not mean that we can't see a counter trend rally into that zone. I think that zone still makes sense. And then looking at the daily, you can see just how extended we are. Realistically, it would have been a better buy in here around 197, but with that huge bear candle on the Friday, on the Thursday, it just didn't make sense. This could have absolutely gapped down and continued lower into the Friday, but it didn't, and we're heading into quad witching. I think it makes sense to see a push back into here. Your trailing stop right now is at 215.56 on the daily chart. Want to see it push into there, and then ultimately I do expect this to continue lower. You can see already we've had a nice push down, consolidation, nice push down. Want to see it either consolidate, maybe retrace a little bit, and get one more third push to the downside. Moving over to the Dow fell 3%, actually underperforming the broader markets. These tariffs are starting to impact the real economy a little bit more. Interesting to see that here. The Dow hit that 55-week moving average at 409.92, ended up bouncing pretty substantially back into the 415 range, but still have this trend line. Want to see it get below there if it's going to do it. Otherwise, needs to hold that for next week, which is right now at 414.84. Then we're going to see the rally into this kind of 432, 433 area, I believe, and then we'll get that continuation lower. You still have a clear double top, arguably a high, lower high kind of setup in here. With a midpoint, maybe it does just continue to cut through there. If you kind of do the target range, that's about 6% lower, so you should be expecting about another kind of 6% lower from there, somewhere in there, which would take you all the way down to my level around that 392 area, 392.44. We'll see. Ultimately, I think it'll still play out. Doesn't mean we can't get short-term rallies and then kind of continuations into that zone. Moving over to the equal weights, down 2.28%, but again, look how much lower we were midweek, 168.87 from the previous week. That was down about 4.25%, but we ended up bouncing kind of in the middle of the candle. That's still a bearish candle for me. Momentum bearish, volume coming through still bearish, clear high, lower high setup with a low, lower low. Is this as low as it goes? We didn't really hit the level. 167.53, 169.76 was the support, at least for this week. Momentum still bearish, like I said, and expecting this to continue lower. Again, counter trend rally potentially, and then kind of choppy action to the downside. Moving over to the ratios, the SPY Russell finally did go negative on the week, just a little bit, 0.75% after hitting the 278 level. So the SPY has been the best performer over the last 5 weeks, really, and now we finally had a little bit of a turn at this level. So is the Russell going to outperform at least a little bit? I hope so. And then looking at the NASDAQ SPY, NASDAQ still underperformed the SPY just by a little bit. But really, we hit this kind of consolidation. Not a big change, just 0.19%. Momentum bearish, RSI still bearish, but Want to see it kind of hold in here, NASDAQ SPY, want to see that flatten out, and then look for the Russell to kind of lead to the upside as those kind of higher growth, higher risk stocks. If we can see some risk on markets, that should be short-term bullish. Moving over to the SPY divided by the M2 money supply, very, very expensive. Remember, this is only sustainable really between the 22 and kind of 19 range. You can see it back here. The low was in this 16-19 area, rallied up to 22, pulled back. Same here, got all the way down into the 14s, rallied up to 22, pulled back. So we have huge exposure to the S&Ps versus the current M2 money supply. Not great there at all. Momentum bearish, RSI hugely bearish. And ultimately, I do think this is going to continue lower. We did find support at the 25.91 level. And ultimately, if this does fall back into that sustainable area, that's about another 21.5% lower. That's what I'm looking for over the medium to long term. But again, short term bullish. Looking for that kind of continuation into that 24.49 area, which would take you back to this kind of consolidation range from March of 24 and the dip low candle here from mid-August. Moving over to Apple and Microsoft, Apple was down 10.7%. What an absolutely terrible week here for Apple. It had been outperforming, but obviously not this week. Huge moves down. Gonna have to extend out some of these trend lines to see where we might stop. If we got another week like this one, that would take us down into the 198 area. We're below all of this kind of consolidation low on a closing basis. Obviously dipped below it on the wicks as well. Momentum bearish, RSI bearish, huge volume. And that's even with the little bit bullishness that we saw on the Friday. Clear high, lower high, consolidation, looks like it's going to break. And then looking at Microsoft, 1.2% down. Momentum bearish, RSI bearish there as well. Got below the wicks from that 5 August week, looking for the trend in here around 368, 369, somewhere in there. And that would be right in line with this 367 to 372 consolidation range that we're looking for. Again, this is weekly charts, so it might take a few weeks to get there. Short term, want to see some gap fills. Maybe we get as high as 413. I doubt it, but I would expect a little bit of relief rally and then continuation into that zone. Moving over to Tesla and NVIDIA. Tesla was down 4.8%, but NVIDIA up almost 8%. We had the trend line here. We said we touched it last week, touched it again this week, and then caught a nice bounce. Again, looking for a little bit more retracement, but still looking for a lower high the same way we've gotten the last 2 times. Ultimately, I think this will probably go back to the 95.74 level. You can see that was an important level back here in March of 24 and then again here August 24. So I think that's where we're going. Doesn't mean we can't get some short-term rallies. I do think we can. Maybe somewhere in the 9 to 10% range and then get the kind of continuation lower of around 28% to that next zone there. So lots of volatility. Either way, still looks bearish. And then looking at Tesla a little closer, you got the 200. If that can continue to hold, maybe we can get some relief out of it. There's a lot of room, obviously, for relief rallies. It's been selling a lot from top to bottom. That's about 50%, so we got cut in half, round trip this move. Want to see this kind of rally up at least a little bit. Moving over to Alphabet and Amazon. Amazon was down 0.65, Alphabet 4.63%, continued big selling there. Huge gap, huge sells. Got all the way back into the price range from October of 24. The level for me is 161.59, well below the 170.95 level. Momentum bearish, RSI bearish. So Alphabet continuing to look very weak as we head into next week. Did find some wick support, but again, that hasn't meant a whole lot here in the recent past. And then Amazon holding that 55 EMA, 195.24, but still can't get above the 200 level. If it can, I think we can go to 212.25. But for now, this is the range that we're in. Momentum bearish, RSI bearish. Decent volume there, actually a little bit of bullish volume for this week. So we'll see if that can hold up next week. Moving over to Meta and Broadcom. Meta was down 2.8%, 4 weeks in a row of selling, right to the level 602.95 after 630 broke. So we got the touch there. We touched it last week, touched it again this week, slightly lower low, momentum bearish. Is it going to break through there and push to the 55? That would be interesting. And then looking at Broadcom, slightly positive, just 50 cents, right at the resistance, 196.23. It seems like semiconductors found a little bit of strength this week. Want to see it push back to 221. This is where we were post earnings. We had nice earnings, still held a little bit, but not all of those gains. So right now, it seems like markets are not rewarding these same kind of growth stocks. Moving over to to staples and discretionary. Staples was down 4%, discretionary is 4.3%. So that's not what you want to see. You don't want to see everything selling. We want to see some rotation here and there. That makes sense. That's healthy for markets. But when you see everything sells like this, that is not super great. Momentum bearish on both, RSI bearish on both. So we'll see. We'll see if this continues to go. It's round trip this move back here from October to current. Is it going to push back into the 200 area down at 174.76? Potentially, if it does that, that's another 11.5% or so from here, 11.25, somewhere in there. And then discretionaries continues to top out between this 83 and 84 area. Once again, we got to that range and then sold off pretty dramatically. So seems to be holding in this range, and it was a big underperformer this week, but it had been outperforming. Now it's more in line with markets, but the main takeaway is that everything sell. If people are starting to everything sell, that is a bad omen for markets. Moving over to utilities and transports, you can see utilities had a great week. It's been holding up really, really well, just slight dips here and there, but 2% on the week in the same consolidation high area. And then looking at transports, I want to talk transports here because you can see we have a clear low, lower low coming off of the trend line here, overthrew it to the level 63.22, touched the level, bounced, gapped up, rallied here on the daily chart. Nice push on the Friday, again showing nice indicators of a potential push into next week. And then looking at it here on the weekly, you can see 4 weeks in a row of bearish, right to that almost 200, momentum bearish, RSI still bearish. So weekly chart still showing that we can get more bearishness to come, but on the daily, I think we get a short-term counter trend rally and then a little bit of continuation lower ultimately. So again, fits the thesis, and transport's showing the same setup. Moving over to breadth, you can see the huge pop on the Fridays that we got, again showing a potential reversal into the Monday, Tuesday, into the expiration week. But I want to show it here on the weekly chart as well. Big wick down to that 16 level, almost got above that 28 level. Higher low setup, want to see some continuation back into this kind of 56 to 72 area, and then looking at that 50-day average, still higher low setup, momentum still bearish, still has some more room to go, but I still think we can get a nice little retracement continuation lower. Momentum I don't think is going to flip on the weekly chart, but on the daily I think we show a little bit of bullish and then continuation lower, probably post expiration at this point in my opinion. Moving over to 200-day breadth, down 21.34%, obviously much lower lows. Structure continues to be very, very bearish here on the 200-day, momentum bearish, RSI almost oversold, but not quite. Hit that 36 level, got all the way as low as 32. Want to see it touch that 29 level. But again, if you look at it on the daily, you had waterfall sell-off Monday, Tuesday, Wednesday through Thursday, and then Friday gapped up and rallied back above the level, momentum stepping to bullish, RSI right at the SMA. Again, showing some potential for retracement, something like this where you get a big waterfall sell, kind of consolidation, retracement to the 55. Ultimately, this goes to a much lower low, but you have a lot of time in here where you get consolidation, which does give you time to sell options against markets. So we'll see if we can get something like this with a little bit of retracement consolidation before that bigger sell. Moving over to the dollar was basically flat, down just 17 cents on the week. Momentum bearish, RSI bearish, we're right in the zone, 103.64. Want to see that continue to hold. Maybe if this continues to sell off a little bit, that would help markets, but for now, we're kind of round trip this move, kind of right here. Want to see it touch that 200. That would be a more solid zone of support, kind of like this, where you have huge sell, touch the 200, get a huge bounce. If the dollar is going to flip bullish at this point, I would want to see it come off of the 200. But right now, you're below the trend, but stuck at this 103 level. Momentum bearish, RSI bearish. Ultimately, this looks a little bit more bearish to that 200 of about 1.25% or so. Moving over to bonds, JNK and TLT on the weekly charts, you can see JNK was down almost 1%. It was 1% at one point, but we're still here kind of in this mid-range. At the high of this consolidation here, but at the low of this kind of consolidation here. Want to see it get above the 200. It hasn't done it yet. It's really been struggling there on the weekly chart. And then looking at TLT, positive on the week, just 6 cents, still holding in this kind of consolidation here. Momentum still bullish, RSI still holding up. As long as 89.16 holds, that's going to be a really nice level. You can see this consolidation here held for a long time, got the rally out, Want to see it hold in here, get the rally out. That's the goal. And for now, bonds continue to outperform massively. Maybe not so much next week since equities have shown a little bit of strength, but over the last several weeks, bonds have held up really, really well. Moving over to the VIX, VIX was negative on the week, kind of surprising there, 6.8% to the downside, hit all of the wicks, hit that next level 28.89 at the highs, touched that level and then sold. Think this is going to go at least a little bit lower into the 20 area here, maybe as low as the 17 area, and then I would expect some bullishness. So I think we can get there within a couple days. Want to see it hold that area and then continue higher, get that lower low in markets, which should give us some opportunities really in both directions. Moving over to my accounts, you can see I was basically flat on the week, which is good. The NASDAQ was down about 3 3/4 or so, and I was flat on the week, so you like to see that. Still positive on the year, which is great. Obviously, markets are absolutely not positive on the year, so still outperforming pretty substantially. Not a whole lot, but a little. Definitely holding my own this year. This is what I wanted to see. I was underperforming early, but now that markets have been tanking, it's a little bit easier to kind of sit on the sidelines and sell a little bit of calls. But for the Monday, I'm actually a little bit bullish. I own some shares, IWM shares, 203 call, sold that against it for $1, so max profit is 204 for the Monday. And then looking at the Qs, sold a 473 for $1. Probably could have been a little bit more aggressive there, but looking for at least a $200 profit on the Monday. Might see a little bit of retracement and then get the continuation higher, but I am positioned relatively bullish here for the early part of next week. Let me know down in the comments section what you thought of the indicators. Are you watching the RSI? Are you watching the 200-day moving average? Which indicators are you looking for your buy signal? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.